I'm really just going to move over here and speak to you guys. Good morning to the audience. So thanks for showing up. Thanks for showing up on time. And so for this session, as it says in the description, we're going to be focusing a bit more narrowly on the policy and regulatory environment around DPI, and specifically talking about what we believe to be some inherent trade-offs that are built into the complexity of the various policies and regulations that are relevant to formulating the DPI ecosystem. So my name is Ahmed Dermish from the United Nations Capital Development Fund. I manage a program in UNCDF that focuses on policy change and regulatory reforms. And we've been talking about the digital finance ecosystem, the ID ecosystem, and increasingly the data ecosystem for some time from a policy perspective. So with the panel today, and I'm going to preface with a little bit of context setting, I hope to really get into some of the hard to answer questions. So at the end of the session, if you have more questions than you came in with, then I think we've done our job. If we've answered anything definitively, then I would question that to be true. So let me just start by showing you how we started, perhaps thinking it was clear, and then maybe where things got complicated. So what this is here on the screen is kind of your classic digital finance ecosystem. So in the DPI context, we're looking at the financial sector component. And at the base of our ecosystem, we have, where does the money sit? Where's that store of value? So we need to regulate where the funds are held, have policies for which entities can hold those funds. But that has to move across networks. So that's where the payment instrument comes in. And from the policy context, now we have to ask questions around who can be an issuer of a payment instrument. What counts as an instrument? What is the role of mobile? Regulations have to define processing locations, et cetera. Now when we reach out and that payment instrument now needs to interact with our customers, now we have the service channel component. So now from a policy side, we have to ask ourselves, who can be an agent? What are the standards for outsourcing agent networks and distributed branch networks? What are the conditions for that? And across all three of these levels, stored value, payment instrument, and service channel, you've got your AML CFT aspects, and you have your consumer protection aspects that cut across. Pretty straightforward. We've been doing this for 30 years, and you add a mobile layer to it, it got complicated. You added a mobile operator layer to it, and it got complicated. But this is pretty well established now. I've been using this slide for probably 10 years. But what we have now, which you can't see at the bottom, is interoperability. So the question we're asking is, how do payments move across from a bank to an e-money issuer, and then the interaction happens at an agent? So interoperability becomes a question. Now, what's the one? Sorry, I can't see it because it's down there, and I should know these slides better, right? So now if we think about, if interoperability now is about financing and money moving across networks and data moving across networks, we've got a data protection component. If we have a data protection component, that implies that these systems need to be protected. So okay, if we have a data protection question from a policy angle, then what's our cybersecurity considerations? And once you have the cybersecurity considerations and you layer the digital ID question, how do we secure people's data so when they transact across network, their personal identities are not compromised? And then at that stage, the people who are moving that data from point A to point B actually control those pipes. But we may want to provide free access to that infrastructure. This is the classic USSD access question, right? Everything from the communications to the customer as well as the back end in terms of verification and authentication. So when you start looking at what was effectively earlier a clear policy framework, and you add a lot of these new areas that we're looking at in terms of truly digitizing and truly scaling, it becomes a function of inherent trade-offs in how we design policies around more complicated ecosystems. And so here are just three, we'll call them heuristics, on where you can sort of predict trade-offs to exist. Can we protect and innovate freely? Can we have scale and diversity? It's kind of hard to have a lot of many things. We can get P2P to scale, but can we really scale productive credit? open questions. Usage and quality. If quality is implied, very low levels of fraud, high levels of literacy and understanding, isn't that going to limit and a zero failure, zero sum in terms of fraud, and in terms of those fraudulent risks, et cetera? Does that mean we're inherently limiting the usage? Because as you grow, there's going to be failures in the system that might affect the quality of the product. And these are open questions. What is the middle ground? How do policymakers navigate that? So when you map this to DPI and you look at this ecosystem, rather than getting stuck, will this work? I don't know if this pointer works. Rather than getting stuck in this mess, what we've tried to do is we've tried to sort of organize it and say, well, if you look at the data exchange payment system and digital ID, there's probably, we'll call it a community of policies, a portfolio of policies that apply to all three levels or platform levels of the DPI. You can't have, 3 electronic transaction regulations that apply to each of these platforms. Doesn't make sense. So now fundamentally we're asking these questions around harmonization. How do we operate with these domains and appreciate their intersection and understand how they might organize around a public policy goal like DPI, and then start to make decisions as policymakers about what we ought to do. So if you just do the numbers now, if you got the 3 pillars plus what we've just started with, 11 policy domains, 33 bilateral relationships, right? It becomes infinitely complicated. So for this session, what we've decided to do is to say, what if we were to extract ourselves and focus on the privacy versus innovation debate? So that takes a bunch of those regulations, because privacy is not necessarily a singular thing. You might have a privacy law act, but the data protection component, the banking act, your ID systems, your infrastructure will all feed into privacy. Innovation is not an innovation law or policy, but there's different elements of the policy environment that facilitate innovation. So we're going to structure this conversation in 2 parts. First, we'll have a technical debate. And that is really about exploring the tension between privacy and innovation to help us understand, based on the previous framing, maybe a pathway through the complexity. And then, most importantly, we'll get the country perspective, which is to say, okay, what does the reality look like in navigating these trade-offs in real time? So I'm going to stop there to trade it off. I'm just going to ask Steve and Eduardo to come up and to kick it off. Happy to take any questions, comments from the 7 of you. Okay, great. Thanks. Yeah.
The starting point of what you said was with the payments system,
Yeah.
But a lot of DPI type applications are also happening in other applications such as health and education. And do you think these will be translatable? So when we're listening to these discussions and debates, do you think that these are translatable, or will the frameworks which are, by the way, really interesting and excellent, I think, representation of the trade-offs, do you think these are translatable, or will there be specific things to look at? Maybe we can talk about it later, but I just thought I'd say it.
No, it's a great question. So what sector are you working in?
I work for a policy think tank
Okay.
in India.
Okay.
And we're looking at everything around the regulation and innovation aspects of DPIs.
So you might have to tell me whether they're translatable. I think they are. So what we're trying to do is trying to take it to understand some foundational principles, first principles that should apply to just good policy design. And oftentimes, good policy design is about having the evidence and making a choice and then measuring that effect. On our team, we have a saying, the best regulation is the next regulation, right? So it's just this inherent process of change, right? So I think the question of what's translatable is, do you see mechanisms in this that can help shape other policies to adapt over time? Does that help? Okay, great. Eduardo, over to you.
Thank you. Are my slides on?
He's putting up the green one. Can you guys introduce yourself?
Yeah, sure. It's not on.
I think it's on. Yep.
It's on?
Oh, yours is not on.
Is mine on?
No, it's on now. You're good. Oh, weird.
Hello? No. Okay. Oh, there it is. Thank you, Ahmed. You can hear me, yeah. My name is Eduardo Totolo. I'm Vice President of Research at the Center for Financial Inclusion. We're a think tank in DC. This is fine, it's okay. We do research on inclusive finance, digital public infrastructure being one of the key enablers that we're focused on a lot in the last year or so. Yes, so what I'll try to do in the next few minutes is to bring in this conversation now. Ahmed introduced me as bringing in the technical discussions. I think mostly just to provide a framing that maybe then will lead to a discussion on the country examples or specific products that where other panelists has more experience on. So bringing in these two conversations that are finding increasing convergence. On the one hand, of course, DPI, on the other, privacy by design. And the goal here is to understand whose responsibility is it? To what extent should the responsibility lie within the public sector, and to what extent should it sit on the private side? Just to, I hope this works. It's not going back, okay. Fine, let me just leave it at that. Just to start on what is privacy by design. Privacy by design basically is a framework that actually was introduced decades ago in the 90s. It's a framework that came from the Privacy and Information Commissioner from Ontario. And basically what it does is that it sets 7 principles, which are in that visual I won't go through, that basically talk about how do you embed privacy at the outset within the design of products and services rather than keeping it as an afterthought, which is normally the actual practice of what happens. So it was introduced in the 90s. It got increased adoption over time. In 2009, it got global endorsement from the Global Conference of Privacy Commissioners. And in the last 10 years, it started being also introduced in legislation, which is a key change in the importance of this concept, of this framework. And most notably, it was included within GDPR. Article 25 of GDPR talks about, well, not specific, it doesn't use the term privacy by design, it uses the term of data protection by design and by default, with clear reference to privacy by design as a concept. So it made its way from being a framework, a concept, to being directly mentioned in possibly the most important data protection law globally. So clearly it is increasingly resonated with different audiences, and it doesn't stop there, because if we, I'm struggling with this clicker.
Point that way, I think.
I found that way, okay. So GDPR included in 2018. Last year, an ISO standard came out in 2023 that provides a framework for essentially integration of privacy within products and services. So an increased level of formalization from the initial principles. And even without going too far, if you looked into the DPI standards, DPI safeguards that were launched last week. There's one of the, I think, 15 principles is on privacy by design. If you look into it, you'll see that there are a list of 40 recommendations on privacy by design and how that can be applied in the digital public infrastructure context. And when it comes to the question of what's the right balance between public and private sector, if you do a simple counting of how many of those 40 recommendations are for private or public sector. You see, out of the 40, I counted them yesterday, there are 26 that are either for regulators or government. There are about 10 or 12 that are for private sector, then a handful for advocacy organizations. So I say a fairly balanced mix, more on the public sector side. But to me, the question goes beyond that, because within the context of digital public infrastructure, essentially what we are doing is that we're to navigate the balance between the public orchestration, which is at the essence of what DPI is, and private sector participation and incentives and investments. So where does the responsibility sit? As we navigate that balance, where does that responsibility sit? it's an open question, and a spoiler alert, I don't have an answer. I just want to frame some of the questions that hopefully I get some insight on from the rest of the conversation. But to me, it's a very important one. A difficult question, that's always been difficult, but in DPI, where we have this public-private participation even being more complex and even being more of a question about what's the right balance, it is, I think, an important question for us to consider. Yes, so I mean, that slide, I can pass it, obviously. So there are two camps. On the one hand, should we think about codifying it more into the law? I mean, that's one approach. There's one camp that essentially says, and maybe there's actually a criticism of Article 25 of GDPR, which says essentially that is aspirational. It doesn't have enough clarity to really make a difference. We can put it as an aspiration, but then there are no specific guidelines that tell operators in the market what do they need to do differently. How do you enforce that? It doesn't go to that level of prescription, and there's a camp that says it should do that. There's another camp that says we need to be very careful about being prescriptive in the law. And I wanted to bring in a quote just from a few weeks ago. I don't know if you saw the Mario Draghi report. Mario Draghi is the former governor of the European Central Bank, so a key political figure, not exactly a venture capitalist. And he did this very influential and very frank report on the competitiveness of the EU. And I put a direct quote from the presentation. Well, first of all, it says there are over 100 pieces of legislation in the technology sector that makes it incredibly difficult for tech companies to thrive in the market. And he mentions that many of these laws, they take a precautionary approach that dictates specific business practices ex ante for risks that are potential, right, but not manifested. And to me, that speaks, it wasn't talking about privacy by design per se, but it really speaks directly to some of the conversations that we're having here. Should we be prescriptive in the law? Because we know privacy is very important. Obviously, it's even more important as we think about the foundational layer of the digital economy, which DPI intends to be. But how prescriptive can we be? He also mentions a number that kind of I found incredible. He mentions that GDPR had an impact of reducing profitability of small tech companies by 15%. I didn't go to check the source, but that's if you look, it's in this Draghi report that came out not long ago. It is impressive. And so there's a camp here. On the one hand, we need more clarity of what privacy by design means, what different behaviors do we want in practice. And on the other hand, how prescriptive can it be? Is that the role of the regulator, of the policymaker? It's an open question. I mean, the other question, and this will be my last slide here, is if we say that maybe it doesn't sit with government, it doesn't sit with regulators, where does it sit with the private sector? It's interesting. Actually, last year we published a report on privacy by design and how that can change business practices. It was interesting. We sent a series of emails to various fintechs, technology companies, and almost always our emails was forwarded to the legal department, meaning that essentially we're like, for now, privacy and privacy by design is something that, yes, has found its presence in the law, and it's found its presence into the legal departments, is ultimately a compliance exercise. And that's a missed opportunity, because if you think about it, the opportunity that at least we see is that privacy by design can be a value proposition to consumers. If you think about consumer centricity, privacy by design can be that the way to differentiate your business model. We see that. We don't see that often enough, but if you think about the search engine, internet economy, like if you think search engines, why do people switch from Google to others such as, I don't know if you know DuckDuckGo? Is this, why do people use that? Is that because DuckDuckGo is a superior product? Probably not, right? It's because they have that value proposition that they do not sell your data, do not track you around and profile you in different ways. That's the value proposition. Even in the AI craze that we're seeing right now, like the competitors of ChatGPT, let's say Anthropic, look into their marketing. What are they saying? We are deleting, your data. We don't use your data that you input to train our models. We deleted your data every 30 days. So that is a differentiating factor. We don't see that often enough, and we don't see that often enough, especially as we think about fintechs and operating in, let's say, lower or middle income markets. But yet it is, I think, a very important role that the private sector can play. Now, this frames the question. Now, I know that as we go to talk about Ghana, Kenya, as we talk about payments, probably that conversation becomes a lot more practical, and some of this kind of pontificating that needs to be grounded a little bit. But to me, the question essentially that I want to pose and that I want to get thoughts on is, whose role is it? How do we combine this public sector orchestration and the role that they can play and the private sector and change the equilibrium from one where we have a law and compliance, that's the access that we have right now, into one that is more around guidance and seeing consumer centricity, seeing it as a value proposition for business. I don't know, maybe I'll leave it at that, and maybe you, Steve, will have some thoughts on that.
I can try, and I would just sort of preface this. So my name is Steve Haley. I work for the Mojaloop Foundation, and I focus on the payments part of DPI, including specifically inclusive instant payment systems at the national level. And I know nothing about privacy, so it was very funny for me that Ahmed asked me to talk about this. But I have a couple of experiences with this that that resonated with what you were saying. And the first was prior to working on interoperability, I worked on the opposite, which was mobile money. And I was the head of product for a mobile money company, and we were owned by two entities, a telco and a bank. And the World Bank came to us and said, hey, we've got this great opportunity. We'd like to use the data that you're generating in this mobile money company, plus the telco data from your parent, to see if we can score loans from your other parent. And so you had three organizations, a mobile money company, a telco, and a bank that were all part of the same group. And the World Bank coming in saying, we'd like to subsidize the risk of using that data to score loans. And the problem was that the bank and the mobile money company and the telco all had three different regulators. And none of the lawyers of those three organizations were willing to allow us to share our data with the other two organizations. And none of our regulators were willing to make an interpretation of the data protection law that would allow us to do it. And so because none of the regulators had issued guidance of what that data protection law could be. So there was a law created by a different regulator, and the regulators, the three regulators that we reported to, didn't have guidance for what that meant for us. So to your point on clarity, and your point on like whose responsibility is it? From somebody trying to implement something, I don't care. I just want somebody to be responsible for it. So so obviously you can decide, you can have debates about who should be responsible. But from an implementation, I think the bigger concern is when nobody decides who's responsible, because all of our regulators could not figure out who within their organization would have been responsible to give us guidance on what we were allowed to do. And this is the other point on what you're saying on prescriptiveness. Laissez-faire is not a good idea either, because what it means is, like, a regulator could say, well, you know what, we're not really concerned. Yeah, can you put that you're not really concerned in writing for my lawyers? Probably not. And so it has, as much as I tend to prefer not being told what to do, in this case, being told what you can do is an important part of the prescription. And again, we did not find that we had regulators who were willing to say, yes, our interpretation of the law is that you can do X, Y, Z, and put it in writing. And so what that meant was that our lawyers, even within one group of companies, and the other piece of that was that the World Bank hired, I'm trying to avoid saying any names, but I'll say this one, hired Experian to come and do all of the data and analysis. All three of these companies had also independently were using Experian as a data analytics firm. We could not, even though we all had contracts with Experian, we were all sharing all of this data with Experian individually. they could not use the data that they had in between them. And so we had all kinds of like, okay, how about if we only share this and we anonymize this? We could not get our regulators, even if we said, what if we anonymize it, what if there's, to actually say to our lawyers, yes, you're allowed to do this. So the biggest bank in the country, the biggest telco in the country, the biggest mobile money company in the country, and the World Bank, in order to try to put out 500 loans to test to see if this would work, it took 2 years until finally the World Bank gave up and said, we're pulling the plug on this project. So this is my experience of just how frustrating this can be if there is not clarity. And so I think that in terms of that innovation versus security, I mean, one aspect of it is how prescriptive should we be? But I would recommend, in terms of thinking about the private sector, making sure we think about how clear it is. Prescriptive, not prescriptive, allow people to just making sure it's clear for the private sector what they're allowed to do, because everyone's going to have layers of bureaucracy and like all compliance teams within regulated financial institutions are going to give themselves a buffer. And so if there's not clarity that says you can do this, then the compliance and legal teams within the financial institutions are going to make that buffer really big. And that's what's going to, in my opinion, thwart innovation more than what the regulation actually says. Again, from my personal biases of one anecdote of one problem. And so that's my anecdote. My question of why I think that's important is that, and again, I'm also very biased on this on instant inclusive payment systems, is that I believe that scale on instant payment systems and on the payment part of DPI, and people can argue with this, comes from free. I think scale comes from free. If we look at all the examples of scaled instant payment systems, they scale when they're free. They scale when there's multiple use cases and they're free. But that means that if you're not going to extract the value from transaction revenue, where are you going to extract the value from? And my hypothesis is that we extract the value from the usage of data, and the usage of data to generate more credit. And so that is the hypothesis of how do we scale the payments aspect of DPI, is by appropriate use of data to grow safe, productive lending. And so hopefully companies like Axion can make a lot more money by lending to a lot more people that they currently can't lend to.
There are no profits.
Well, yeah. We can talk about a few places where they've made some good profits on a few MFIs. But not profit, but revenue that drives more lending. I mean, so that's what we would hope from the MFI industry. But that can only happen if we have clarity on how that data can be used. So that's why, to me, I think this question is fundamentally important to get right. Also because, I mean, I'm biased on the payments part of DPI, but it's a use case as opposed to a lot of other things are much more of a utility. And so a driver of payments as the DPI is also a driver of a lot of other aspects of DPI. So if we want scale, I actually do think that this question of data privacy is the thing that's going to drive scale and sustainability of the payments DPI, which is going to drive scale and sustainability of a lot of the other DPIs as well. And my pitch would be that making sure there's clarity is more important than making sure it's right. And this is where, as we've talked about, we diverge in terms of the importance of data. So yeah, that's my pitch on why we should think about this. My divergence? Oh, yeah, we've had a few fun. There's two ways to think about, and it's not a divergence. We've actually had quite a few conversations. We're actually quite aligned on this. But yeah, I think we're all heading out into the unknown, and collecting data as we go through the unknown is going to be important, but I don't believe in making decisions on the next movement based on data. I think making decisions on the next movement is based on an intuition of the entrepreneurs that are moving in that direction, as long as the data is following up to say whether they were right or not. But the next step you take is based off of faith and intuition, and it's just a matter of following up after that to see if you're going in the right direction.
Yeah. I appreciate that you said that there's convergence. There's not. No, there's some, to be fair. But, no, I mean, to me, it's a big debate, so I don't want to take us too far, but it's interesting. It's true that free obviously drives adoption. There's also open questions on, for how long can you sustain it. And it's interesting, I mean, without going into the cases of PIX, UPI, because we kind of all discussed that, but yesterday, we had a very interesting roundtable on online dispute resolution, where we have a role play where there's a regulator, a bank, and we had to deal with fraud. And fraud is rampant in in many of these payments. In that case, the example was on PIX, and the debate quickly turned into who's going to pay for this, right? Because ultimately, without redressal mechanism, the person who is the victim of the fraud is the one that usually has to pay the bill. Now, there are other ways. Maybe you can say, well, you can do insurance. And now there's PIX insurance, for example. Who is going to be able to afford PIX insurance? Is going to be those who can, on the higher level of the income distribution. So we have higher protection for some and lower protection for those who cannot afford it. And then we say, okay, maybe we can put a levy. But then goes into, is it going to be free? There's going to be a cost somewhere. Protecting consumers ultimately, as much as we all prefer doing things for free, it comes at a cost. And we just need to have a frank conversation. Where does that come from? And I think it has to be less of an ideological, it should be sitting on maybe a public policy choice. It should come from the government. Fine, that's a choice. Or it should come more from kind of a private, kind of market-based solution. That's another solution that we can consider. Maybe there's not a single answer. But yeah, to me, understanding some of the economics of how do we ensure that the risks are funded, that have the needed finance to be effective, is an open question. And affordability is key, but also protection is key, and that comes at a cost. Who foots the bill? I don't know. I don't have an answer.
So sorry, I can't let this, but I think I totally agree that it has to have a. There's just charging a transaction fee is only one of a million ways that you can recuperate the value of and recuperate the costs on a transaction. And I mean, just thinking about the roads, if we all had to, sorry, I use this example a lot, but if we all had to pay 50 cents every time we left our driveway to go drive somewhere, we would think twice whether we drove. Whereas we pay that when we fill up our gas tank in most places because you put a tax on the gas. And so if you can recoup the cost in a way that is more invisible to the users, you can still take that. So it's not like it's free. Yes, it has to be paid for in some way, but it's a matter of figuring out how do we do that in a way that doesn't limit people's usage of the system. And yes, there are all kinds of costs and there's all kinds of frictions that these systems are going to have, and there should be frictions. Where I would say is that if there are companies that are making money off of friction, if companies introduce a system, a mechanism that allows them to make money off of that friction, those companies are not incentivized to reduce that friction. And that's, in my opinion, why we have stagnation in the payments system, is because there are a number of very big companies making a lot of money off of friction that they don't want taken out. Because you can make, if friction costs 1%, you can charge the world 2%, and nobody cares. If friction costs 0.01% and you still try to charge your 2%, everyone's going to be a little bit annoyed. So it's a matter of, yes, we've got to make sure that we recoup that cost, but in a way that doesn't encourage the ongoing friction to exist. That's my point.
So we're going to pause here because I think that's exactly the tension we want to hold on to before we bring up our other colleagues. I think, free, I'm also hearing almost no barrier to entry, right? So framing it as the barrier is cost versus the barrier is friction, and that friction is affordability, right? So if then the debate in the business model becomes further downstream. And I think your question about who should bear the responsibility when privacy and elements around protection create friction, right? You can almost add to this question here, when does who bear responsibility for what aspects? Because there's a whole chain, like you said, okay, I roll out of my driveway and I don't pay anything, but I will have to fill up the car at some point down that chain. And is that the point where, because the bus that took the kids to school, all these other elements were allowed to operate in a way that was good for everybody? So I think just recapping a couple of the things, I'd like to ask Tamara and Setar to come up. And so now we're going to shift the conversation to a bit more of a country focus. And so we'll be joined by Tamara Cook, CEO of FSD Kenya, and Setar, I didn't ask you how to pronounce your last name. Amediko. From the Bank of Ghana, director at the Bank of Ghana. Setar, you've been at the bank for 28 years. I asked Setar yesterday, what's different about DPI? He's like, I've been doing this for 28 years, in some form. And so I would just love to start with, based on what you heard, what examples can you share with us of where you've had to make a trade-off, a decision that parallels what we've been talking about, ideally in the context of sort of data and privacy. But yeah, where can you share with us in real life, when you've had to make the decisions that Steve and Eduardo are talking about?
Thank you, Ahmed. As Ahmed said, I've been working in the Central Bank of Ghana for 28 years, and I spent most of my years in payments. I established the payment system department and in 2015, and I've headed that department for almost 9 years. I just handed over to a staff of mine. I'm now coordinating our branches. Now, I've listened to Eduardo and Steve conversation, which were very, very interesting. It just reminded me of the practical experiences that I have to go through, especially in the formulation of our Payment System and Services Act in 2018, and how to handle the National Communication Authority. Steve talked about in an environment where you have several regulators and how to go about that. These are all practical things that happen on the field. On the issue of privacy by design, who should be responsible? From our experience, practically, we think it's a public policy that the regulator must take responsibility. However, there need to be collaborative engagement with the private sector in formulation of that. Now, I think Eduardo also made a very important point in terms of whether privacy by design should be codified or not codified. And in my practical experience over the years, I will propose that it should be codified. When it is codified, it provides guidance to the market, it avoids conflict, it also engenders innovation based on my practical. So when we were formulating our Payment System Services Act, we have had all these issues that you have discussed. So we incorporated these provisions in our Payment System Services Act as a codified instance, which brought some sort of agreement between the central bank, the revenue authority, and the National Communication Authority, who are the supervisors of the telcos. You talk about the mobile money subsector. Now, we had a situation whereby the Ghana Revenue Authority wanted consumers' data, real-life data, for revenue assurance. And we were also bothered on issue of privacy, data privacy, because as a central bank, we should be concerned that people's private transactions are not in the open. So what we did was to codify this in our act to give guidance on, in this situation, what should be done. So there was an agreement that the data that we give, some aspects have to be masked, not everything has to be given, okay? Now, in the issue that Stephen also raised in terms of when you have several regulators, we also had the same thing in Ghana where we have the mobile money operators are regulated, the telcos are regulated by the National Communication Authority, and then the central bank issue a license to a subsidiary of the telco. So what we did to ensure that there's understanding is to have a memorandum of understanding with the NCA, the National Communication Authority, so that everybody, every institution will know the rights and responsibility. We have a MOU in place. And providing MOUs also help in fighting fraud. You discuss also fraud in order to ensure a very safe cyberspace. So in that MOU, you provide detailed procedures in how to collaborate to fight fraud in the space. I think there's another thing that I picked from the discussion, which in terms of appropriate use of data. Now, yes, we agree that data is a very essential, especially for innovation and then creating opportunities for even the consumers themselves, because you can leverage on data and provide other value-added services. However, we need to ensure that there is a responsible use of data. So we have a framework that talks about how consumer data have to be used, and with the concept of the consumer. So I think so far these are the things that I have picked in the discussion, which actually reminded me of things that we practically did to resolve these tensions.
No, I think that's, you guys hear me? He's on? Nope. Is this working now? Okay. Your point on codification and clarity, I think, is an important one, because if they're not sufficiently codified, then it's going to be hard to have that collaboration between institutions. I mean, to your point, you know, when the lawyers get in the room, there has to be a foundational common legal basis upon which they're discussing. The conversation we had yesterday, you know, with Eduardo is inherent in privacy, or this tension between who's leading the conversation. Is it the product people or is it the legal people? And at the moment, I think what we see is it's really coming from a legalistic perspective, because protection is the goal. And I think the point you're making, Steve, is, you know, what if we were to say protection and scale? What if we were to add an element to that? And then would the codification look different if we were oriented a bit more towards that scale aspect, right? You know, the friction element. So it's not to say don't codify or codify, but to say the codification, because you need that to get regulators to speak to each other, right? We can't not do that. And I think the fundamentals of DPI is that regulators have to speak to each other. So I think it's really interesting, you know, how the collaboration and the codification sort of modeled in the Ghana example. Tamara, you know, FSDK sits between all of this, sort of market actor, facilitator, you know, 20 years plus. And you've seen everything from microfinance to digital finance to now open finance, the hierarchy, and you've been there for a decade, over a decade. What can you give us a snapshot of where you've seen some of these frictions and trade-offs in the Kenyan market, which over the last 10 years has seen an unbelievable amount of innovation and a lot of regulation, if I dare say, catching up, sometimes more effectively than others. So, you know, how do you want to fill in the gaps from your view in this conversation, from your experience?
Thanks. No, I think Kenya is a really fascinating example, and I could speak to everything that's already just been spoken, and then we would be here for the rest of the day. But maybe just a couple things that I'll pull out. And I think, you know, for FSD Kenya, we work very closely with the regulators, policymakers at their request when they would like support. We work with the private sector and help them try to be innovative. And we see ourselves kind of as this neutral convening player. But the thing we're never neutral about are low-income households and those who lack the kind of value-adding financial solutions that they need. And I think a lot of these regulations may have the intention of helping get those value-adding financial solutions into the hands of low-income households, farmers, women, micro and small enterprises, and yet a lot of them actually can backfire. So one of the things I was thinking about, we've talked a lot about payments and a little bit about credit, and one thing that we've seen is that credit markets are an area where the ideas or principles of digital public infrastructure could really play an important role. Credit information sharing is one, and collateral. So those are the two I think I'll talk about briefly. On credit information sharing, that has been a very long journey in Kenya. It started with negative information, then it went to positive information. It's not public because it's 3 private bureaus, right? But it's regulated, and how does that work? And then who's in and who's out? What I find a little bit hilarious is this idea that data protection came in. It's supposed to protect consumers, right? And yet what it's doing is it's protecting them from credit. It's protecting them for more affordable options. It's protecting, right? And so, a conversation I had with a fintech recently where they said, no, we're not reporting to the credit bureau. Why would we do that? And I was like, you just told me this beautiful story about this micro enterprise who's gotten this loan from you, and I know what your interest rates are. So what you're saying is you would like to continue lending to her at very high interest rates and not give her the option to borrow from somewhere else, not give her the option to use her data. And that's what, Eduardo was talking about. That data should belong to Wanjiku, not to FinTech A. And Wanjiku should be able to decide, I want to go to FinTech B, or I want to go to the SACCO, or I want to go to a bank with this data that I have generated, that I have earned with this performance. And so I think that's one of these, with the privacy innovation, let's make sure we're not keeping that not using privacy as an excuse. There are multiple players in Kenya who have used data protection legislation as an excuse to hide what they consider to be their data from whose data it should be, which is the customers. The other area that I'd like to talk about is collateral. There are 3 types of collateral that are registered in Kenya currently. One is land registries. Digitizing those is incredibly political. And the privacy issue there is that people don't want to know who owns it and why, and there's a lot of things going on there, right? And so even, I remember a senior government official told me when he proposed digitizing the land registers, he got death threats. That's a different kind of privacy than what we're talking about, right? But something we have to think about, because the political economy of these decisions, it's not just, here's a cool technology, here's a cool regulation. Implementing them has real world challenges. But one area that I'm really passionate about is movable property. Movable property is cattle, chattels, inventory, and this is the kind of property that women are more likely to own. And so we've got a movable property security registry in Kenya, and getting that the legislation's fantastic. The technology to register it is not ideal. But even if you've got that, then you've got to get banks who are willing to lend against that. We have 2 problems with that. We're talking about all these different regulators. One problem is that the way Kenya has implemented Basel shows that movable property doesn't count, and so they have to treat it as if it's an uncollateralized loan. So it may help me reduce my risk because I can take that property if they don't pay, but it doesn't help me with part of the cost of the loan, which is having to reserve for that or make provisions for that. The other area that is problematic is that if I need to reclaim that asset and it's registered, it's all the rules are there, and I can't get that registry back, I go to the courts. What we found were the judges had no idea about this thing. They understood land and repossessing land, but repossessing a cattle was new to them. So part of even getting there is you've got to go to the courts and say, judges, here's what this means. Here's what this means in law. Here's how this law should work. And so we actually train judges in order to be able to get that movable collateral to be used and recognized and more used. And I think that's part of the journey. Maybe the last area is on IDs. In Kenya, which is an interesting story, and Eduardo, you could talk more about this, Kenya's ID journey. But what I'd like to say is that we actually saw a decrease in people with IDs in Kenya. We went from 94% of people had IDs in 2019 to 91%. That doesn't sound like only 3% have gone down. But what's really important is youth. So we've talked about women, I want to talk about youth. So let me not make sure I get this right. So the percentage of youth who did not have an ID in 2019 was 19%. That's a lot of people, right? But that increased to 28% of 18 to 25-year-olds who didn't have an ID in 2021. And there were some reasons around that, and some of these issues we're talking about are that. And if you don't have an ID, then you can't get a mobile phone. Then if you can't get a mobile phone, you can't get a payment. If you can't get a payment, you can't get a credit, et cetera. And so we just need to start looking at all of these things and how they interact.
No, thanks. Thank you for kind of bringing the client view into it, right? So we're going to continue to riff on this question, right? So who should bear the responsibility? When should they bear the responsibility, and to the benefit of whom? Right?
The benefit of whom.
You've just articulated a couple different segments, right? Vulnerable means many things in many contexts. I think another thing that there's two other elements that I heard here. Sort of the privacy as an excuse. It's almost like from a regulator's perspective, when you have high compliance, that might be a problem. It's just saying in the military, when the soldiers are not complaining, you have a problem, right? And so there's this element, it's like, oh no, we're complying with the law, right? And say like, well, but we're not seeing the outcome we want. So maybe there's a little bit of an issue there. And then on the sort of interacting with the judges, and I think this is really central to the whole DPI conversation, is it's a fascinating approach to seeing the system for how it is, right? So you're playing through the whole value chain of where the incentives lie. And to your point, Steve, if there's friction in the process, and the example you're saying is if it does get to the courts 3 years down the line, it's that friction point that could be the deal breaker, because that is really how the whole system operates. I think it's a nice roundup, right? So we've got this perspective that you've provided, Eduardo, which is kind of this framing around privacy, and inherent within it, there are trade-offs. So it's not privacy and innovation. It's like within privacy, there is a debate about how we should treat it, and where is its origins and why. And then, Steve, this, start with free, this idea that entry point needs to be frictionless, but there are other elements, there's other things downrange, and different business models will have different approaches. And then if you do find yourself stuck between all these different regulators, how do we understand the tools available? You gave us some ideas around, the MOUs, but we need the codification to make those happen.
Right.
And tomorrow you really kind of gave us the client view to this, and that's kind of the impact. So I'm conscious of time. We have some time for questions. Maybe I can ask you, did it answer your question? Is it?
I guess that I have to test it out later. It did actually, because the principles are all there. I have a separate question, which is moving on a little bit from privacy to competition, which we did talk about a little bit. But to your point, Stephen, free data, and this is something that is coming from the India example, that we don't charge for UPI, or at least yet it's subsidized. But the fact that data could be harnessed, data is where they were extracting value. What we found that it was mostly the large players who could participate in the ecosystem, which means that even though you had removed entry barriers and you're allowed more people to participate in the ecosystem, what it did to the market, or so we suppose, is only make it viable for very big players who were able to participate in the ecosystem. So if you're looking at the other policy priority, like privacy is one, scaling is another, but if competition is the third, and why competition becomes important is we want to look at it in a dynamic sense, so not about reaching scale right now, but how that scale is sustained and engagement continues. How does would your response or thinking around free change? This is not a question, anyone could take it, but because you'd brought this up, I thought I'll ask that, how would you think about free when you're looking at this whole thing in a dynamic sense, and not just about scaling up at, in the beginning?
So the first thing I would say is that, India is the leader, and I've written quite a bit about how much I love UPI. No, really, I have. I took a road trip during COVID right when it started taking off, and it was like, I've been in a number of countries watching credit cards grow in places where they weren't before, and I was lucky enough to be in India when UPI had that, like, this crazy 6 months where I went on a road trip, and by the time I got home, everyone all the merchants were using UPI. It was 6 months. It was mind-boggling. But I would say that my response to the challenges that the India market is facing around consolidation of the big players is to say, let's learn from those lessons, and exactly what Tamara was saying of making sure that not only does the individual own their data, but the individual has the knowledge of how to take advantage of the fact that they own their own data. There are some nuances also in the way that the UPI was built that did inherently give the top 3 payment initiation service providers a pretty incredible advantage, and the big banks a pretty incredible advantage. And so I think there are nuances in how it's structured that I hope we've learned from, and we can, for both of those aspects, we can learn from and then apply in other markets, rather than say, it didn't work, throw out the whole thing and let's go back to the 90s. I would say, yes, that is a challenge, and I think there are some nuances in the structure of how data gets shared, which, with account aggregators and other data exchange aspects, I think is moving in the right direction, but we're not quite there yet. But there are a few other nuances that I think could have been tweaked and still could be tweaked to give more competition there. Limiting an idea of maybe not to do is saying you can't have more than 36% or 35% market share. Clearly didn't work. So another good idea, try it. It didn't work. Let's try some other ways of increasing the market. So I just say, yes, that is a massive problem. Let's learn from it and share with other countries so that they don't run into the same problem. But again, the fact that it's free is not the cause of that problem.
Yeah. Any other questions, Rose, and then Camilo? Do you have the mic, ma'am? Ma'am, do you have the mic up there? Oh, he took it.
Thank you so much for all your inputs. This was such a really interesting panel. And so this question is for our central banker. I'm interested in, especially from, I guess, an open data perspective, is the Central Bank of Ghana looking at open finance at all? Because this is also something that there is some pushback on in various markets, because also privacy arguments, data privacy arguments and all of this, but also that consumer data is used as a competitive advantage, which is often to the detriment of market development. And also just, I think one of the panelists mentioned the impact assessment that was done by the Central Bank of Europe on consumer protection regulation. And I'm just interested in the other panelists, have you seen any of this other data come up in, privacy regulation? Are we looking at how it impacts consumer outcomes? Are there proportionate applications of this that look at relative vulnerability and how this affects, innovation in the market?
Thank you. Currently, yes, we have a draft framework for the open finance, which is being discussed by the market, and it's something that the Central Bank of Ghana is open to.
Yeah, on the impact, I don't know if you know, Eduardo, of any impacts on data on the privacy sort of experience in consumer protection. I'm sure it's out there. Nothing comes top of mind. But it does raise a point that there should be some heuristics that we're all working with, I think, to move DPI forward. But do you know of any?
I've seen some studies, particularly on GDPR, which is the more mature law, and some have indicated, of course, that the compliance costs have gone up. Now, it's a difficult assessment to make, right? Because then there are some intangibles, maybe increased consumer trust, and how do you measure that into your models? So, I always take those numbers with a grain of salt. In fact, yesterday I was having a conversation over a cocktail, and people were directly questioning, so I went and double-checked that. Actually, that was said in the presentation, and I can tell you the exact minute. So, I mean, but generally, yeah, the question there is, there are compliance costs, and those compliance costs are particularly heavy on the smaller techs, right? And as you know, the European Union has been quite lagging behind on kind of, you know, having big techs, attracting big techs, and the fact that they constrain smaller techs because of this compliance cost, this upfront cost, which require a lot of capacity, systems, is something to be taken into consideration. And also because it's the law that then is being replicated in large part in many markets, right? Like it's the one that everyone kind of looks up to. If you look at Brazil and a number of other countries, really, like they've modeled the data protection around the EU. So I don't know if that fully answers. I would say, like, you know, it's a difficult question, and there are studies out there that kind of indicate that challenge.
I do think we're seeing some anecdotes, though. So, for example, in the opt-in versus opt-out. So, you know, I have to default opt-out. In low literacy environments, I don't even know what I'm opting out of, right? And so it defaults. There's the behavior, there's the familiarity. So you're just, you know, I just want to get to the thing I want, so accept, right? And so, you know, maybe it should be the other way. You actually have to opt in by default, right? So there's these anecdotes like, well, it doesn't make any sense. I mean, I remember being in a meeting once and the guy was like, listen, I went to Harvard. I have a law degree from Harvard. I have no idea what these terms and conditions say, right? Like, how do we expect, you know? So I think there's some anecdotes that are emerging. And then there's also elements of, there's a case in the US where a family that was disputing some Netflix thing, I think it was, or Disney Plus, and they couldn't actually sue because in the terms and conditions, they were forced to go to mediation, right? And that was buried in, wait for it, your data protection stuff. So all of these things, right? That's right, yeah. Exactly, right. So at the group level, and sort of to this point on competition, you know, when you have these super platforms where everything is in it, and the super platforms in this case has infrastructure as well as a digital relationship, and your relationship with them is digital, but if you touch the infrastructure, you're implicated with what you've done. And all of that is under the auspices of how do we use your data and how do we, you know, so it's getting interwoven. So these anecdotes are coming out now. And we have to figure out to what degree are these really indicative of a systemic problem versus just, anecdotes for more sophisticated markets, for example. But I want to take two more questions. Camilo, you had one, and then ma'am, you had one, and then we're going to have to close out.
Thank you very much, Ahmed, Dr. Setter. Great conversation. I guess one comment and question that I had was there's obviously a move towards away from consent-based to privacy by design, but wondering perhaps, you know, what, opinion you have of, say, when you have ad target groups, you know, and there's, for example, like sharing of devices, which we know is a behavior that happens in many countries. How do you design privacy in a way that actually protects, you know, some of the more vulnerable groups, right? We know, for example, that there's quick balance views in some of the applications, and if there's sharing of devices, it actually exposes women to potential, intra-household violence. And I'm just wondering if you have any ideas about, you know, how actually providers can perhaps like do better segmentation of the users, and as a result, you know, basically design privacy in a way that is actually much more targeted to the various users, right? Yeah. that are actually accessing the technology.
Yeah, maybe we should ask the former head of product guy.
As I said, I was head of product for a mobile money company, so we didn't care.
But I think from the central bank perspective, that is a great question, and we try as much as possible to protect, especially the vulnerable group, by providing specific parameters on what need to be included in the product. Most of these products also are approved by the central bank. So we ourselves, we test these products over a period before they are rolled out, in order just to protect not only the vulnerable group, to ensure that unintended consequences are not created in the market.
Yeah, you know, it's the device sharing one. I think, Camilo, is a fascinating one because I think it really speaks to the smartphone world, right? And I don't know what the data is on the number of people who have smartphones but are not connected, right? So the interface needs to be distinguished from the online component, which then needs to be distinguished from the digital literacy aspect, right? So if I were to pick up your phone now, and I would bet you and I probably have similar ways of working with our phone, in addition to dressing similarly. That was a joke for everyone else. But your phone would be completely different than mine, right? But how you used it, et cetera. And it's designed to be hyper-individualized and create an experience to ease access. So it's a really great question because it really puts us on the front edge of the technology relationship with freedom and the technology relationship with ease of use and all of this. And now if inherently more vulnerable communities have to share one of those, then this is not fit for purpose, right? And so what is it? Is it just multiple biometrics? So, you put your thumbprint and it'll automatically take you to your profile, right? Like, from a design view, I'm sure if there were technologists in the room, but I just don't think we're there. That's my opinion. I don't know, I don't think we're there to be able to answer that in a sufficiently sophisticated way that honors the real risks of getting it wrong, which is, to your point, like inter-household tensions and violence. Like, that's a huge risk, but I think we're behind the ball on that, is my view.
One thing that we've done a little bit of work on is we do a lot of demand side data with the Central Bank of Kenya and the Kenya National Bureau of Statistics, and there we can find out how many people are using someone else's phone to do things. And one of the things we were talking with one of the mobile operators about was they can't see that. I mean, they may be able to figure it out, but they can see whatever's happening on that phone, on that SIM card even, right? But they don't know that it's a man and a woman. And normally we hear the story, oh, it's a woman who doesn't have it. I actually participated in one of the recent FinAccess surveys. It's just a quick one, but this is hilarious. This guy, he's technically financially excluded, but he's taken 3 Hustler Fund loans from the government, one from his mom's phone, one from his daughter's phone, and one from his phone before the bar took it because he had drank too much and his bill was over, and so he had to sell his phone to pay off his bar tab. So it's a different kind of thing, but like Safaricom can't see that that's what happened, and those 3 Hustler loans are actually the same guy because none of them are actually attached to him anymore, right? And so those are the kinds of things that, like, we need to look at this demand side data and supply side and look through all of it. The other thing in Kenya, which I know you've heard of, is how many people got the digital loans, like all their cousins and uncles and teachers got called when they didn't pay back. I'm really delighted to say that from a privacy standpoint, that is no longer happening. And so that was a bad use of somebody's data, and that market conduct has changed, and we're seeing that in the
So can I say one positive outcome of this panel is we need to find ways where those experiences become that, okay, that's a win. And we should see more of that embedded up front in the design process and the policy compliance. We have time for one more question, ma'am, and then do they take it? Oh yeah, here we go.
Hi, Siobhan Green from USAID. So wanted to comment on the fact that I love the conversation about how privacy is really context-based. We're talking about how privacy to a woman and the risks around privacy really do depend on who you are and where you are. So we did some work on an app that worked with young women in reproductive health. And what was interesting was when you talk to the developers, they're talking about cybersecurity and privacy, they're like, oh, we're worried about hackers. I'm like, I'm worried about this young woman having this device, this information on her phone and her brother or her parents seeing it. Right, and that changes the actual design of how the logouts, the icon, and so forth. I wanted to also give a shout out to some of the work that we've done at USAID. We did responsible data considerations. So really understanding the balancing these tensions. There is no one-size-fits-all answer. We do want to have the data for, case management, for predicting and preventing atrocities and so forth, but we also need to make sure that we're not harming individuals while we're doing that. And how do you balance those things? The point about oftentimes privacy is used as a weapon to prevent transparency. is incredibly common because the people who can protect their privacy are oftentimes those who are already in privileged positions. So it's something for us to keep in mind.
Yeah.
We also have a document that we just put out with a video on responsible data governance. And so one of the ways to address some of these contextual issues is around data governance, right? It's around what decisions are you making about the data? Who is actually making those decisions? Do you have data subjects in that conversation? And do those data subjects actually represent the complexity of your audience, right? So if you just talk to a couple of well-educated men, they're not going to be able to represent, say, the needs of an unmarried woman in a rural area from a minority religion or someone who's LGBTQ, right? Especially since being LGBTQ is illegal still in 70+ countries and highly stigmatized. It's really important for us to have these conversations before the software is designed, so privacy by design, and then also make sure that we're maintaining and monitoring these impacts, right? Like, are we finding that privacy has been weaponized? Who's actually benefiting from it? Is it stopping us from being able to achieve it? And but then how do we address that? And how do we balance the fact that maybe we're not going to get the great data, but instead we're going to protect people? So these are the kinds of, I love this conversation because we've addressed a lot of these things.
No, thank you so much. We've got to wrap it up. There's some great thoughts to end with. Like I said, you're going to walk away with more questions, and we've succeeded in that process. I'd like to ask you to thank the panel, and thank you guys for showing up. And yeah, thanks a lot.